Welcome. We're here today thanks to an arrangement by my tax accountant. They're a well-known accounting firm here in the UK, as you probably know,
That's right.
and they brought us together for a focused discussion on something really key for homeowners. Private residence relief. You'll often hear it called PRR.
Definitely a really important topic.
Yeah.
Yeah. Essentially, we're going to unpack what PRR actually is in the UK, and maybe more importantly, what it means for you when you come to sell your home.
Exactly. Think of this maybe as your personal guide to understanding PRR. We're aiming to look at the rules, who qualifies and some of the key things to keep in mind.
Hmm.
And we're drawing this from official HMRC guidance and other expert insights. The goal is to give you a clear picture without hopefully getting bogged down in too much jargon.
Let's hope so.
So let's
Yeah.
dive right in. In simple terms, what actually is private residence relief?
Okay, so fundamentally, private residence relief exists to shield homeowners from paying capital gains tax CGT on the profit they make when they sell their main home.
Their main home, right?
Exactly. The idea is that the gain you make on the place you actually live in shouldn't really be taxed, like, say, profits from investments or a buy-to-let property.
That makes intuitive sense, doesn't it? It's your home. And I imagine the savings could be pretty significant, especially considering the CGT rates. What are they currently?
Well, for this tax year, 2025-26, the CGT rates on residential property gains are 18% for basic rate taxpayers,
Okay.
but it jumps to 24% if you're a higher or additional rate taxpayer.
Wow, 24%. So PRR stopping that tax bill is, well, it's a huge benefit.
It really is.
Good.
Almost a quarter of your profit potentially gone without it. PRR is designed to prevent that, provided you meet the conditions, of course.
Right. I think I saw a figure somewhere about the total savings.
Yes, the numbers are quite something. HMRC estimated that back in the 2023-24 tax year, PRR saved UK taxpayers collectively something like $31 billion.
31 billion. That
Yeah.
really puts it into perspective. It shows how widespread and valuable this relief is.
Definitely. It affects a lot of people selling their homes.
Okay, so if we want to make sure we qualify for the full relief, what are the core conditions? What boxes do we need to tick?
Right. There are several key criteria. HMRC actually has a really useful help sheet, HS283, which goes into all the detail.
HS283, okay.
But the main ones are, first, the property has to have been your only or main residence throughout the whole time you've owned it. It's got to be where you genuinely lived.
Your primary home. Makes sense. What else?
Second, no part of the home should have been used exclusively for business. That word exclusively is
Yep.
important.
Right. So occasional home working is usually okay.
Generally, yes. If you use a room sometimes for work, but it's also, say, a guest room, that normally doesn't count as exclusive business use. It's more about if you've got, like, a dedicated office that's only used for business.
Good distinction. That's helpful for a lot of people now. What about the property itself, the size?
Yes, the garden and grounds.
Yeah.
The rule is generally that the total area, including any buildings on it, shouldn't be more than 0.5 hectares,
Which is about.
around 1.24 acres. For most typical homes, this isn't usually an issue.
Right.
But if you have a larger plot, it's something to be aware of. Although HMRC can accept a larger area if it's genuinely needed for the reasonable enjoyment of the house itself, maybe with a very large old house, for example.
Okay, so there's a bit of flexibility there if it's justified. What if someone buys a place just to flip it?
That leads to another condition. The property shouldn't have been bought solely with the aim of making a profit on resale. PRR is meant for genuine homes, not, property development disguised as home ownership.
Got it. Not for speculative buying. And what about if you haven't lived there continuously? If you've had periods away?
Absences are okay, within limits.
Yeah.
HMRC allows certain periods of absence. For example, you can be away for up to 3 years for absolutely any reason, and that period can still qualify for relief.
3 years for any reason. That's quite generous.
It is. And there are longer specific periods allowed if you have to move for work, either elsewhere in the UK or even abroad.
Okay, so if you meet all those conditions, main home, no exclusive business use, right garden size, not bought just for profit, and any absences are allowed, then you pay no CGT on the gain.
That's the goal, yes.
Yeah.
Full PRR means the gain is exempt.
But life isn't always that simple, is it? What if you only meet some of those conditions, or maybe you rented it out for a while?
Exactly. And that's where partial relief often comes into play. You might not get full relief, but you can still get some.
How does that work?
Well, one key rule is that the last 9 months you own the property always qualify for PRR, provided it was your main residence at some point before that. It doesn't matter how you used it in those final 9 months.
9 months, okay. That's a useful buffer.
And that period is actually extended to 36 months, 3 years, for people who are disabled or have moved into long-term residential care.
Oh, that's a really important extension. Good to know. So if you lived there, say, half the time you owned it, how was the relief calculated?
It's generally done proportionally. You work out the total gain, and then you figure out what fraction of your ownership period qualifies for relief, the time it was your main residence, plus those final 9 or 36 months. That fraction of the gain is then exempt.
Right, so you calculate the exempt proportion. Makes sense. Now, you mentioned specific situations. What about when a property is sold after someone has passed away by the personal representatives or executors?
Yes, there are specific rules for that. It falls under Section 225A of the Maine Capital Gains Tax Act now. It essentially gives relief if certain conditions are met.
Okay, what are those conditions?
The main one is that immediately before and immediately after the person's death, one or more individuals were living in the property as their only or main residence.
So continuous occupation by someone around the time of death.
Yes, and those individuals living there must also be entitled to at least 75% of the net proceeds from the sale. Or, put another way, have an interest in possession, a right to benefit from 75% or more of the property.
75% entitlement for the occupants.
Correct. And crucially, the personal representatives have to actually make a claim for the relief. It isn't automatic in these cases.
Right, an active claim is needed. Okay, let's switch slightly. What if someone owns, say, 2 homes? How does PRR work then?
Good question. If you have more than one residence, you can nominate which one should be treated as your main residence for tax purposes.
You can choose.
Yes, but you need to tell HMRC. There's usually a 2-year window to make this nomination, starting from when you began having 2 residences.
2 years to nominate. What if you just don't?
If you don't make a valid nomination, HMRC will decide which property was factually your main residence based on, well, the facts, where you spent most time, where your family lived, where you're registered for things. It might not be the choice you'd have preferred for tax reasons.
So it's definitely better to nominate if you can.
Absolutely. And one other key point here. Married couples, or those in a civil partnership, can only have one main residence between them for PRR purposes.
Yeah.
They can't nominate separate properties.
1 per couple. Got it. Now, something called letting relief used to be quite generous, I think. Has that changed?
It has changed significantly, yes. Letting relief is now much more restricted than it used to be.
How so?
It primarily only applies now where you let out part of your main home while you are still living there. The classic example is taking in a lodger who lives alongside you.
Ah, so it's for sharing your home, essentially, not for when you move out entirely and rent the whole place.
Exactly. That's the key change from April 2020. If you moved out and rented the whole property, you generally won't get letting relief for that period anymore.
That's a really important update. And is there a cap on the relief if you do qualify, like with a lodger?
Yes, there is. The amount of letting relief is capped. It's the lowest of 3 amounts. The amount of PRR you're already getting on that part of the gain, a fixed sum of £40,000 per owner, or the actual amount of gain you made specifically during the letting period.
£40,000 maximum, potentially. Yeah. Okay, and just to circle back quickly to the garden size, that 0.5 hectare limit.
Yes, the permitted area. Generally, 0.5 hectares or 1.24 acres is assumed to be the standard size needed for the reasonable enjoyment of the house.
But you said it could be larger sometimes.
It could, yes. If you can demonstrate that the specific character and size of your house objectively require a larger garden or grounds for its reasonable enjoyment, then HMRC might accept a larger area qualifies for PRR.
Right. But what if you sell the house and then later sell off a chunk of the garden separately?
No. If you sell part of the garden after you've already sold the house it belonged to, that separate sale of land generally won't qualify for PRR. The relief attaches to the disposal of your home, including its grounds at that time.
Okay, that makes sense. Sell it all together if you want the relief on the garden part.
Usually, yes.
So, wrapping things up then, it's clear that private residence relief is, well, a really major tax relief for UK homeowners.
Absolutely.
Understanding the nuances around main residence, any business use, the property size, periods away, it's all pretty crucial.
And those specific rules for personal representatives selling a property are important to be aware of, too.
Definitely.
But it's also worth remembering, tax rules can get complicated. Everyone's situation is a bit different. What we've discussed today is a good overview, sort of the main principles.
Yeah.
But getting advice tailored to your own specific circumstances is always, always a good idea.
I completely agree. And actually, on that very point, if you do want to explore your specific situation in more detail, maybe check how PRR applies to you or ensure you're claiming correctly. My tax accountant, who, as we mentioned, arranged this discussion, they'd be very well placed to help.
They certainly have the expertise.
Yes, they can provide that tailored guidance. So we really hope this overview has been helpful and giving you a clearer picture of private residence relief.